Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Veris Residential Inc. Annual Report. Veris Residential Inc. offers a range of businesses and services through its technology-enabled platform. At the core of their offerings are premier-class multifamily properties in the Northeast, which they own, operate, acquire, and develop. This includes providing residents with a contemporary living experience that aligns with their preferences. Their vertically integrated operating platform enables them to deliver a range of services, including property management, maintenance, and community engagement. By leveraging technology, Veris Residential aims to positively impact the communities it serves while maintaining an inclusive culture based on meritocratic empowerment. Veris Residential, Inc. market capitalization of $2 billion is materially smaller than most of its industry peers of roughly $12 billion. Veris Residential, Inc. trades at a higher price-to-earnings ratio of 25 times and a lower price-to-book ratio of 1.53 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 53% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline in a company's financial performance can be attributed to 3 key factors: core FFO, funds from operations, growth, asset sales, and debt repayment. These drivers have consistently been mentioned across multiple pages as the main contributors to revenue fluctuations. Core FFO growth is a crucial indicator of a company's ability to generate cash flow from its operations. Exceeding maximum targets in this area demonstrates a strong financial performance, enabling the company to invest in growth initiatives and reward shareholders. Asset sales also play a significant role in driving revenue growth by providing a one-time influx of capital that can be reinvested in the business or used to reduce debt. Debt repayment is another critical driver of revenue growth, as it reduces interest expenses and frees up cash flow for other uses. Exceeding maximum goals in this area indicates effective financial management and a commitment to reducing leverage. By focusing on these 3 drivers, companies can identify areas for improvement and make strategic decisions to drive revenue growth or mitigate decline. The company's net income and profit margins have shown a positive trend. The target of 2.7% same-store NOI growth was met, contributing to an increase in net income. Profit margins were also positively impacted by the same-store NOI growth, as well as debt repayment targets being met and partial achievement of ESG/technology goals. The company's operating margin has remained stable, with further improvement in controllable expenses. This stability is a positive sign for the company's financial health. Additionally, the profit margin remains at approximately 68% for the full year, indicating no change from previous periods. Overall, these changes suggest that the company's financial performance is improving, driven by its focus on debt repayment and operational efficiency. The company's financial performance has been impressive, with several key metrics exceeding their targets. One of the most significant indicators of a company's health is its ability to generate positive operating cash flow. In this case, the company has achieved just that. A closer look at the company's achievements reveals that it has exceeded its targets in 3 crucial areas: core FFO, asset sales, and debt repayment. The core FFO target was met at $0.72 per share, demonstrating a strong financial performance. Additionally, the company successfully sold assets worth $525 million, which not only generated significant revenue, but also reduced liabilities. Furthermore, it repaid $479 million in debt, significantly improving its balance sheet. These achievements collectively indicate that the company is generating positive operating cash flow, which is a testament to its financial stability and growth potential. The company's financial performance has shown significant improvements in its debt level and interest expenses. A notable achievement is the actual debt repayment, which exceeded the maximum target by 99%. This is evident from the fact that $479 million was repaid, surpassing the target of $190 million. As a result, the company's debt level has changed significantly. Furthermore, the reduction in corporate borrowing spreads by 75 basis points suggests that interest expenses have likely decreased. This development is expected to have a positive impact on the company's financial health and bottom line. Overall, these changes indicate a significant improvement in the company's financial performance. That concludes the financial summary for Veris Residential Inc. Feel free to comment below, and I will be happy to answer them when possible.